Hello, hello, hello. Happy Friday. How's everyone doing today? You know what? I just don't have much to say today. Rallied all week, looking for the pause. Going into next week, we have lots of key earnings next week. We have the Fed meeting next week. We have the GDP numbers next week. And then we finally have the PCE numbers next Friday after the Fed meeting. So next week is going to be super busy. But as we get started, let me say good morning to some people. Good morning, John. Good morning, Mark. Good morning, Patrick. Happy Friday to you. Good morning, Martinez. Good morning to McRangers. Good morning, Royal Palms. That's it. We got a quiet day. There's people hiding in the background. I see you, but you can jump in the chat. All right. All right, all right, all right. Let's just get right to it. Cycles now look like they're rolling over on the daily, but we should be going into at least some kind of pause possibly next week ahead of all the key numbers. At least take a little breather. Might just be a sideways little pause. Yesterday turned into another rally day. Today we have the 15 minutes after the cash open. We have the S&P Global Composite Manufacturing and Services number. Everything expected to be in still expansion except for the manufacturing number still expected to be in contraction, but rising slightly from prior. Then we have some existing home sales, but the bigger thing at 10 a.m. Eastern is the consumer sentiment numbers, but more importantly, the inflation and expectations. So I'm going to be keeping an eye on that to see, again, prior 2.8. Again, that's prior 2.8 from December, but the other January print, the initial print was hot, and it's expected to be 3.3 for the short term and the longer term. So, again, that could be getting inflation more entrenched in people's minds. So that's going to be key. If this does come in better, market could take it dovishly and try to put on a little mini rally today, but I'll be watching that. If it comes in hotter or hot, then could be the trigger of a little sell-off. I'm not doing anything stupid on a Friday. Good morning, Ted. Good morning, Heinrich. Good morning, Eric. All the latecomers. Good morning, Daniel. Infiltration. Yes, it's the infiltration expectations. Hello, Charles. We'll look at gold and silver today. So this morning on the heat map, Texas Instruments down after reporting earnings. Apple, we got the slight little bounce there. The double hit the first and second target yesterday. Let's see. But it's sort of a quiet morning. It's sort of quiet in terms of groups. You have basic materials really leading it today. Basic materials and then comms services and the consumer cyclical. Verizon reported too, which was a beat. Fed watch. We still have the pause until June. Nothing's changed there. Remember, Fed meeting next Wednesday. Back to finally neutral mode. And retesting now the cash made new highs. The futures have not made new highs yet. PE ratio 38.59, and also this is the most expensive market ever in terms of price to sales ratio, surpassing the prior all-time high. Does that mean the market has to stop going? No. Is it are the fundamentals just completely out the window? Yes. With Verizon and American Express is also a beat today, but there's not a lot of things that were really market moving here this morning. Overall, by the way, uranium did trigger. I didn't talk about this yesterday, but on Wednesday did trigger the double bottom after stalling at the first target and still climbing. So the first target is 31.77 for this little double bottom. And if you go on the conservative target, it's about 31.74. So you could just use roughly 31.75 as the first key target area. Next target is at the prior 12.5% harmonic right around 32.60, and then 33.43 to return it potentially to triple top, recent triple top area, and overall longer term, multi top area. So building a little higher base, could not pull all the way back to the 200 week and triggering the little double. Also this would be a percent beat buy because we're going to close well below above last week's high. You again had to front run it. but that is also key. Just wanted to point that out. Now, it's okay, Sterling. I appreciate you being here. We appreciate every day you can put in things. Little pause here. Very overbought. Cycle's trying to roll over. That's why coming into a Friday, again, unless we get something off those consumer sentiment numbers / inflation expectations. Boy, I can't say inflation today. That's the only thing that's going to make me sit up and notice if we start breaking out stuff. The key breakout level to me is 61.55. The key breakdown level for me is right below about 61.33, 61.34. That's what I'm watching. Other than that, those are my support and resistance levels too. So when I say breakdown level, we have to start breaking down below 61.34, either with a lot of momentum or breakdown, retest, and roll. Otherwise, I'll be looking at that for support because it would be support until it's broken. And for the breakout to the upside, it has to be around 61.55, either a breakout with momentum or a breakout and a retest that level. Otherwise, that will be key resistance going into the open. So, by the way, if it does, we have a very significant level at 61.61. And then we have a lot of resistance at 61.72. So keep that in mind higher. If we did get a momentum breakout, the next major target, though, is 61.82. NASDAQ also basing at this little minor harmonic. I'm raising this now to the pausing bar, which was confirmed yesterday because we did not. It's not a red pausing bar, but it did not take out the prior day's high. So that gives me, again, a target area where against very, very key resistance right now. We're against very key resistance right now. This little shelf, which was a gap open reversal at 22,050. We break through that to the upside. I'm looking at 22,210 roughly to 22,268, and then the major target, if we go to new highs, is 22,435 in the short term. On any pullback today, again, same thing I'm looking at. Support for me going into the open, 21,980. Very key resistance is 22,055 area. So I'm watching right there. What else do we have? The Dow. Good morning, Jacob. The Dow, again, ticking off that 75% harmonic. On a pullback with the Dow, the key support area I'm watching now is this 44,300. Again, we don't even have a pausing bar on the Dow, so still the next magnet price, if the rally does continue, is 45,205. Russell is still against very key resistance zone between 2330 and 2338. The only thing for a breakout, we'd have to start trading above 2338 for me. Other than that, yesterday tested the key support level, this 2295 area, 2295 to 2300. So those are the same levels I'm watching for breakouts or breakdowns on. VIX finally dropping below 15 again. Fears slowly coming out of the market, getting very complacent again. Heading into the Fed pause meeting, the DAX just keeps marching. I mean, look at this. DAX getting very overextended from the rotation zone. So would not be chasing the DAX higher at this point. Hitting the next major is 21,550 harmonic. Don't even have a pausing bar yet. So if we had to go back further to get another anchor point, we'd have to come back to there, which gave, we already hit this. This is so interesting the way the harmonics line up. It's just always fascinating to me. So again, we had 21,550. It's again, this 651. We have 21,654 when I expand the harmonic back down to the farther anchor, since we have no more short-term pausing bars. But look at how that lined up. Remember, if I re-anchor it to here, See where the green line is. Now see if we come back down here to the longer term. Look where the red line is. So that gave a target area. And then if it does continue higher, 22,572. But this is getting very overextended against that would have been a harmonic cluster right there. Okay. Notes. Watching to see whether we turn this into the head and shoulders or whether this breaks down. But the notes have to really break below 108.04 on the trading basis for the 10-year contract or on a yield basis. Going to watch if it rolls over and makes a potential head and shoulders top, or we have some pretty substantial resistance at 4.66. If we start getting momentum through there, then I'll watch for this to continue and the bounce back, especially with cycles starting to climb. Now we have the Fed meeting next week, which is locked in for the pause, but it's going to be all based off Powell's comments. And Trump yesterday said he wants lower rates. Well, the Fed doesn't even control the yield curve, the long end of the yield curve. The bond market does. So he might want lower rates, but you know what? Fed could cut this, say, okay, we'll cut it to 0. Is that good enough? But you know, the long end could scream unless they start issuing short term and start buying up the long term market, a la Japan, which then we don't have a market anymore. It's just all manipulated. Where else do we sit? Did I say good morning, Jacob? I know we got let's just look at the dollar index coming back for the bigger correction, coming back down to very key support level. And also, you see here right at breakout level. So there's nothing to do yet for me, but I'm going into next week, going to be looking for a bottoming pattern. Crude, the double, which did not confirm a trigger yesterday, so there's no bounce play yet. I will be going into next week looking for a potential bottoming play in here. We're at a very key resistance level back into the rotation zone with cycles getting to the bottom. So next week could get interesting. Sunday night, if we do have the percent B pullback area, I'll be watching for Friday's high potentially. Natty gas, still no trigger on the potential double top. Still confirmed, but no trigger. Gold tapping off that 87.5. So we're right there. We're right there. Support now is back at 27.61. If it spikes below at 27.50, but on a closing basis is 27.60 area. Again, we've broken out. We've broken beyond the top at the end of November and the top at mid-December, and we've recovered it. So I'm continuing to watch for the key breakout play, and the next major cluster stop raise for anything in the short term is 28.60 roughly, and the next key level beyond that is 28.90, 28.85, 28.90. Silver, still not getting much traction. Silver still needs to close above 31.76 in the short term. So that's the short-term level that's still watching for any bullish plays there. So nothing else to talk about really with silver. It's just caught in a trading range now. Technically, if it does close today above yesterday's high, it's a consolidation percent B buy. But then that would have to be managed closely if you're not already long silver, because it's in a consolidation, and what would be preferable if not only it broke above yesterday's high, it could close above 31.76. But it doesn't look like it's going to do that. So it's got a very careful area. So that's your silver and gold. Your yen turned into, now it confirmed without ever triggering the double bottom, and then it turned into a triple bottom. And it, again, on a shorter term basis, a triple top. So now it's just a horizontal channel for me. The breakout level is 156.80 roughly. The key support is 155. So those are the two levels I'm looking at in the yen right now. And if it does break above that 156 area, then the key target for me is 158 in the short term. Euro, really ugly pattern here. I'm just really focused on if the euro can pop to 105.86, but this is not a great setup for me going into next week with a potential bottoming pullback in the dollar. So I'm really just not doing anything looking at the euro. Spiders, again, spiders to new highs. Spiders to new highs. Again, the next key target is 613.30 and then 617.50. The very key support is right at 605.45. If we did break below 605.45, not necessarily today, but next week, then there's the potential pullback. Look how overextended from the rotation zone we are, is to the gap fill though, to 603.05. Right now, your minor support is 607.85. The Qs still have the magnet price of 534.20. So that's still the key thing. And above there, the next key area is still, there's a gap left behind to 538.17. So those are the two upside targets. Key support is yesterday's low. Keep an eye on that. 528.45 on any rollover play. It's also by the highs back from the day before and the day after Christmas. And then if we did drop, especially next week, with cycles at the top, it would be to the gap fill of 524.80. NVIDIA, just an overall consolidation. Is it breaking down? Not yet. If you see here on the weekly, we're still now. It has not been able to close below the weekly rotation zone since back in September. And then it immediately reversed. So I'm watching that on a closing basis. Other than that, we're in triple top territory, which slightly favors a breakout. But this is getting laborious. Would I be loading up the farm up here? No. It would be only thing would be short-term trades for me. Based off this right now. So that is it. Just updating my levels. So on a breakout play, if it did break out, the major cluster areas is 159.40 to 160.67, minus 156.14. Tesla, still not able to do anything with, it's definitely turning into a channeling double, but the probabilities are still, it might be one that doesn't work, but the probabilities are still higher. Now, if we lose the 50 on a closing basis at 380, that's roughly where the 50 is, then I'll be watching for the pullback to roughly about 270 over the next few weeks. So that is the key level for me, because that would also mean the double's been invalidated and did not work. So I'd be watching for something the other way. So you say 380 supply coming, that's where the critical area is. What else? I already covered uranium. Broadcom, again, in triple top territory, trying to hold the rotation zone still. Not much to talk about there. Apple. So yesterday, I pointed this one out. Hit the first, second, and I went this because we had nice bottoming. I shifted this to the right-hand side for myself and was targeting 227, which we got up to 227.03. When a target's just on the other side of a round number, I generally put my target just in front of that round number. So like 226.95 kind of thing. But that is played out. Remember, these were bounce plays only in Apple because we're still against the daily rotation zone. We don't have a longer term bottom. Just wanted to point that out with a little tip that if a target is just on the other side of a key round number, I move it slightly. All right. Let's just peek at the S&P going into the open. Going into the open, nothing has really changed with the key support and resistance levels or the breakdown and breakout levels. So I'm just going to be focused on those 10 a.m. Eastern time numbers. I hope everyone has a wonderful trading day and a fantastic weekend. Again, we'll NFL. We got what, the Bills and the Chiefs. Good game there, and the Philly Eagles versus Washington Commanders. So we're going to know after Sunday who's going to the Super Bowl in a couple weeks. So I'm going to be watching some football on Sunday. With that, I shall talk to everyone later. Bye for now.